back. Just keep an eye on a couple of stocks. We have Honeywell, which has now moved to the high point of trade from the broader markets. Alongside that, Teamlease is the other one, which is surging as well as we speak. And then, some gains seen on Jindal Worldwide, up almost 15%. So these are a bunch of stocks which are moving around in an otherwise wobbly day for the mid-cap index as a whole. Let's talk about the management now. We do have with us V-Guard Industries. The margins in their second quarter were hit on account of input costs still being significantly higher than what we've seen in the long-term average, and that was understandable as it was for a lot of companies in the second quarter. We have with us the Chief Operating Officer, V. Ramachandran, joining in to tell us more about the quarter gone by. Thanks a lot, Mr. Ramachandran, for joining in. On the operational front, just wanted to understand why are margins lower this time around? In fact, the bigger question, when do you expect it to revert to the double-digit levels that you've seen in the past?
As you know, copper prices have come down, during the first half, right? And we have booked the impact of copper prices, partly in Q1 and more in Q2, because basically what it meant is that we had to sell high-priced inventory at lower prices. Yeah. So I think there is about close to maybe 1.5% impact, of copper prices on our Q2 result, right, at an EBITDA level. Yeah. But then, overall, if you look at, at a half-year level, we are still up about 9 to 9.5% on first half EBITDA. And, if you add back the copper impact, it will be a decent first half performance, right? Now, although it will be lower than our top line growth, and that is continuing to represent the impact of the weaker pass-through in input cost, right, on the overall portfolio. And, till the existing commodities consumed and, we start to consume newer price commodities, maybe in the next 1 or 2 quarters, the overall margins will get pre-COVID level, right?
All right, so if you could give us a sense about demand in the ECD segment. Fans, well, it was an off-season. How was demand, though, for water heaters?
I think water heater demand was decent, although lower than our plan and expectation. Overall, ECD, demand has been, better for us, but still lower than our expectation. Yeah. So ECD as a segment, for the quarter would have grown at about 21%. But our plan was to grow faster.
Right. So did you grow faster than the market, however, because your plan was to grow faster than the 20% plus that you grew at? Just wanted to understand if there were any market share gains across the categories.
We would have definitely posted market share gains in ECD because our ECD growth is stronger compared to the market, and that's mainly in water heater and in fan category, and that's happening because of the impact of our product portfolio being strengthened over the last 12 to 18 months. So this is an area where we have gained shares. I think we have kind of gained shares even in the electronic segment, mainly stabilizer and inverter battery. I think this area also we have done moderate growth, although not as strong as what we have witnessed in ECD.
Well, sir, we're well into festive season. Tell us how demand is shaping up, and has there been any kind of impact or for retail inflation? How are inventory levels looking as well?
As I've been saying, we have done below plan in the consumer, ECD sector, and that's fundamentally, on the back of some slowness that we've seen in the market, starting, I would say, second half of August, and even September was a bit slow. Yeah. So to some degree, this has meant a slower growth and a little bit of inventory is left behind because of lower sales than planned. As far as the the period, upcoming period is concerned, I think Diwali, close to Diwali, things did pick up, particularly, I would say the last 5-6 days, around Diwali, there have been significant pickup. Yeah. But there is a bit of slowness in the other part of our portfolio, which is the, electrical segment. There also we are seeing, some bit of slowness in the last 30-45 days. Yeah. So I would say that it is not as what we would have desired, but we have been able to post moderate growth.
What about price hikes? I mean, what was the kind of price hike that you've taken in this quarter, and should we expect any further price hikes now that prices are coming down for raw materials, or this is where it stays?
Price hikes, so post, middle of May or 20th of May, right, commodity prices have started to come down. And, consequently, we decided not to take, any further price revision as, the price reduction in input was obviating the need for price increase. However, what is happening is that, because of, COVID, we had higher than normal inventories. And this inventory is taking time to, go off our books. And in this period, we are consequently witnessing, lower than, normal growth till this impact of higher price commodity is moving off our books. And particularly, there has been a price reduction, and there have been price reductions in wire because of price reduction in copper, right? Because wire prices, move very closely with copper, both on the upside and on the downside. So there haven't been any price increases either in Q2 nor is anything presently planned in Q3. Rather, there has been price reduction in wires, right, and which is showing in our margin drop for wire, right.
Well, so I wanted to get your insight into the performance in the non-South markets in comparison to the South markets. What is the growth gap between the two?
I think non-South growth has been good for us. We've seen strong growth in non-South. So if you look at typically, the gap between South and non-South is about 10%, right? So if you look at our long-term growth rate, the non-South market is growing about 10% higher than South. It's better to talk about long-term growth rate when you're looking at South versus non-South rather than short-term growth rate, because many factors may vary from quarter to quarter, like weather and stuff like that. But broadly, we are tracking well, and we are on course, to continue to maintain that kind of a differential growth between South and non-South.
And what about marketing spends? I mean, how do you plan to allocate those going forward in your capex plans? Just wanted to understand the way you are going to spend your money on capex as well as marketing.
Last quarter, we stepped up our marketing spends to 2.3, 2.4%, 1.7% in the same period previous year. And this first half also, we have increased marketing spends over first half of last year. And marketing spends, travel and other activities are now normalizing in line with, what was pre-COVID level. So, there is a significant improvement in that respect, right?
Well, what about the demand for pumps? How does it differ from the erratic monsoons in India?
Pump demand is very geographic. So wherever there have been, heavy rains, right, those areas, I think demand, has been slower and lower. Yeah. And those areas, because the water table, right, water table has moved up, and the need for, pump has, because access to groundwater is a lot more easier. So yes, I mean, pump has been under a bit of pressure, compared to our plan, because of, stronger, monsoon and erratic monsoons, but heavy rains, right, which have happened in Q3, yeah. Q2, that is, July, August, September period. So pump has been, lower than planned.
Right. Just wanted to understand the newly acquired Guts Electro Mic. You've acquired that in switchgears business. How did that perform, and what's that likely to be?
Guts is fundamentally, supplying to V-Guard. So it was, so fundamentally it's supplying to V-Guard, and the demand and growth of Guts business is, strongly correlated with the V-Guard, switchgear business. There is some amount of business that Guts is doing, with other, what I would say, OEMs, which it traditionally used to do. This part of the business is, coming down, yeah, but nonetheless it is there. Guts has posted a decent, I would say, double-digit growth, and is supporting the overall growth of the V-Guard business. But since a significant part of that business is, involves supplying back to V-Guard, so when we consolidate, that revenue will be eliminated, right?
Okay, all right. Thanks a lot, sir, for joining in and filling us in with all those details about the numbers in the past quarter. But I'll tell you what, we'll just try to squeeze in one more before you go. Tell us about the outlook on the top line and margins for this year.
Generally, we would not like to give a guidance for the year. I think fair enough to say that when you look at our overall performance, we are we would typically at the beginning of the year, we had set out to grow our business at 15% top line growth and double profits every 4 years. So generally, what we set out to do. This year, because of the COVID issues in first quarter of last year, Q1 has been better. So the growth may be better than the 15% growth that we typically set for the business in terms of top line. Bottom line, obviously, as you can see, right, the bottom line has been under stress because of input costs coming down. Which meant that we have had to sell wires which are priced higher at lower prices and take some impact. As far as the non-wire is concerned, that again there is some margin impact because of the slower pass-through of input cost increases, right, which have happened over the last 12 to 15 months. So I think that naturally as a consequence of this, the margins will be lower than our long-term growth and plan that we have. That being said, our margins should come back to pre-COVID levels by March, as the high-cost inventory is moving out, right? In some category or in some segments, like for example, electronics, right? We have 6 months. We have decided to give between 6 months to 1 year inventory in some categories as a measure of supply security. So you will find that the inventory here will normalize over a much longer period of time. So consequently, I think by March, the margin should come back to long-term level.
All right, we take that point. Thanks a lot for joining in.